What if I told you that one analyst just predicted a single stock could be worth? What if I told you that one analyst just predicted a single stock could be worth not $1 trillion, not $5 trillion, but $20 trillion by the end of this decade? And what if the man who called the 2008 financial crash just issued a public warning about one of your favorite stocks? Welcome back to Stock Edge Analytics. Today we are breaking down 7 of the hottest stocks moving markets right now across the US and the UK. We have got Nvidia, Tesla earnings dropping this week, Apple's secret weapon, Palantir's billion-dollar government deal, Micron's incredible run, Google's AI chip power move, and an energy price warning that affects every single one of us. Stay with me. This is the kind of market week that separates the investors who win from the ones who just watch. Let us get into it. Let us start with the stock dominating every financial conversation this week. Nvidia, here is the headline. Beth Kindig from the IO Fund, one of the most respected tech analysts in the country, has come out and said that Nvidia could be worth $20 trillion by 2030. To put that in perspective, the entire US stock market is worth roughly $50 trillion today. She is saying Nvidia alone could represent nearly half of that. That is an extraordinary call. When you look at the numbers, you understand why. Nvidia is trading at $200.76. The forward price to earnings ratio is just over 24, and the average analyst price target sits at $268. Some analysts are pushing as high as $300, but here is where it gets interesting. While the bulls are screaming about $20 trillion, the company's own directors have quietly been selling shares. $207 million worth of insider sales in recent weeks. Insider selling does not always mean a stock is heading down. Executives sell for many reasons. But when the people closest to the company are cashing out at these levels, you need to factor that into your thinking. Nvidia remains the undisputed king of AI infrastructure. The demand for its chips is not slowing down. But at these prices, always be aware of your position size. Number 2. And this one has a hard deadline. Tesla. Circle April 22nd in your calendar right now. That is when Tesla drops its first quarter 2026 earnings report. And the market is on a knife edge waiting for it. Tesla is currently trading at $400.62. Sounds impressive until you look at the valuation. The forward price to earnings ratio is sitting at 370 times earnings. 370. That is not a traditional car company valuation. That is a valuation built almost entirely on faith in what Elon Musk is going to deliver in the future. Specifically, fully autonomous vehicles and humanoid robots. Because here is the reality. Tesla's core automotive business, the cars it sells, that revenue has been declining for 3 consecutive years. The competition from Chinese electric vehicle makers, particularly BYD, has been brutal. So what does this earnings report need to show? Analysts want guidance. They want Musk to lay out a clear timeline on when the robotaxi service goes fully commercial, when Optimus robots start generating real revenue, and whether the company can defend its margins in an increasingly competitive market. Tesla is a stock you either believe in completely or you do not. If you hold it, this earnings call on the 22nd is must-watch. Number 3. And this one is about what is coming more than what is already here. Apple. Apple is sitting at approximately $273 per share, near its 52-week high. Bank of America and Morgan Stanley have both raised their price targets into the $315 to $325 range. There are 2 massive catalysts on the horizon that have the analyst community very excited. Number 1. Siri is getting a complete overhaul. Bloomberg is reporting that at Apple's developer conference this year, the company will unveil a fully rebuilt Siri with a conversational interface similar to ChatGPT. If Apple can finally make Siri competitive with Google and OpenAI, that is a game changer for hundreds of millions of iPhone users worldwide. Number 2. The foldable iPhone. Reports suggest Apple is planning to launch a foldable smartphone before the end of 2026, priced at over $2,000. Premium, exclusive, and positioned at the very top of the market. Apple is the most valuable company in the world for a reason. It has a loyal customer base that almost no other brand can match. If both the AI and the foldable land well, this stock has significant room to run. Number 4. And this one is a genuine battle between the bulls and the bears. Palantir. Palantir is one of the favorite stocks of the retail investor community right now. The company builds artificial intelligence platforms for governments and large corporations, and its U.S. commercial business is growing fast. The big news this week: Palantir is in the running for a major contract with the Federal Aviation Administration to modernize U.S. air traffic control using artificial intelligence. If they win this, it is a massive deal, both financially and in terms of credibility. But enter Michael Burry, the man who made $800 million betting against the housing market in 2008, has issued a stark warning about Palantir. His concern is the valuation. Palantir's price-to-earnings ratio is sitting at 232 times earnings. Burry's warning comes alongside growing competition from Anthropic and other AI players moving into Palantir's core markets. His argument is simple: even if Palantir executes perfectly, the stock is priced for perfection, and that leaves very little room for error. Great company, exceptional growth potential, but the valuation demands serious scrutiny before you buy. Number 5, and this might be the most underrated stock in today's entire list: Micron Technology. While everyone has been focused on Nvidia, Micron has quietly been on an absolute tear. The stock has delivered a 150% return over the past 6 months alone. Let that sink in. Currently trading at $406.84, Micron's year-over-year revenue growth is up 196%, nearly double in a single year. The story here is memory chips. As artificial intelligence data centers keep expanding at a pace that is almost hard to comprehend, the demand for high-bandwidth memory has gone through the roof. Micron is one of only 3 companies in the world manufacturing the most advanced memory used in AI systems. The difference with Micron: it is an American company. In today's geopolitical environment, that gives it a very significant strategic advantage, particularly when it comes to U.S. government contracts and data center build-outs on home soil. If you have been sleeping on Micron while chasing Nvidia, this might be the week you take a closer look. Number 6. Google, and this one is about a strategic move that most people have not fully processed yet. Alphabet, Google's parent company, is currently trading at $341.22. Despite being one of the most powerful AI companies on the planet, Google is actually considered reasonably valued compared to many of its big tech peers right now. The news this week: Google is reportedly in advanced discussions with Marvell Technology to co-develop custom artificial intelligence chips. Why does this matter? Because right now, every major tech company is deeply dependent on Nvidia for their AI hardware. Google building its own custom silicon, the way Apple did with its M-series chips, could dramatically reduce costs and give them a serious competitive edge. Google already has its own TPU chips for internal use, but a partnership with Marvell would take things to a completely different level, designed specifically to compete with Nvidia's most powerful data center chips. If you are looking for a more defensive big tech play with real AI upside and a valuation that does not make your eyes water, Google deserves serious attention. And finally, Number 7. And this one affects everyone watching, whether you invest in energy stocks or not. The United States energy chief issued a formal warning this week. Gas prices could hit $4 per gallon or higher in the coming weeks. The reasons are a combination of ongoing Middle East tensions and tighter refinery capacity heading into the summer driving season. For investors, this is a potential opportunity. When oil prices rise, the profit margins for companies like ExxonMobil and Chevron increase significantly. Both companies generate enormous free cash flow when energy prices are elevated, and both pay reliable dividends. ExxonMobil and Chevron are both considered defensive plays, meaning if the broader market gets choppy, they tend to hold their value better than high-growth tech names. They are not exciting. But in an uncertain environment, steady and reliable can be very beautiful. If energy is not already part of your thinking as a diversified investor, it might be worth a conversation with your financial advisor. All right, let us bring it all together. This week we have a $20 trillion Nvidia prediction that is either very exciting or very sobering, probably both. Tesla earnings on the 22nd that could move the whole market. Apple quietly building the future with AI and a foldable device. Palantir with a huge government deal on the table, but Burry watching closely. Micron as the most underrated AI play of the moment. Google making a smart, quiet chip move. And energy prices about to make every person in the US and the UK take notice. Markets reward those who stay informed and think ahead. That is exactly what we do here at StockEdge Analytics every single week. If this breakdown was useful to you, please like this video. Subscribe if you have not already. Drop a comment below and tell me which of these 7 stocks you are most interested in. I read every single one. Our next video drops on Tuesday, April 21st. We will be back with fresh market analysis and the stocks you need to be watching going into the end of the month. This video is for informational purposes only and is not financial advice. Always do your own research and consult a qualified financial advisor before making any investment decisions. I will see you on Tuesday. Stay sharp.